Let's take a look at a problem that relates to decision making in the short run. This problem will be about special order decisions. Of course, that occurs when you receive an order that's just out of the ordinary. They want some kind of customization, they want to offer a lower price, there's something different about the order. Oftentimes you're trying to use excess capacity. Jamestown Candle Works has just received a request from the Williamsburg Foundation for 800 candles at a special price of $2.95 per candle to be used in a special event for major donors. The candles will be imprinted with the Williamsburg Foundation logo, which will require the purchase of a mold costing $800. This sale will have no effect on the company's normal sales to retail outlets. The normal selling price of a candle of about the size and weight of the special candles is $3.95, and its unit product cost is $2.50, as shown below. So basically what's going on here is we got a special order for $2.95. We normally sell these candles for $3.95, and in order to do this we'll have to buy a mold for $800 because they want a special logo imprinted on the candles. Alright, so the typical candle costs $1.55 in materials, 15 cents in labor, and 80 cents in overhead for a total product cost of $2.50. Variable manufacturing overhead is 5 cents per candle, and the other 75 cents represents fixed manufacturing costs that would not be affected by this special order. If accepted, what effect would this order have on the company's net operating income? So of course you need to identify what costs will change if you accept the order. So go back and look at the information that was given, especially focusing on the paragraph that says the variable portion of manufacturing overhead is 5 cents per candle. The other 75 cents represents fixed manufacturing costs. And also look at what's given there for materials, labor, and overhead. So these two pieces of information together tell you that the 80 cents of overhead cost has a variable and a fixed part. The variable part is 5 cents, the fixed part is 75 cents. Now that's important because we know if we produce extra candles, all of the variable manufacturing costs will be incurred. Extra fixed costs may or may not be incurred. So to simplify, let's go ahead and calculate a variable cost of production. That would include direct materials, direct labor, and variable overhead. So $1.55 plus 15 cents plus 5 cents, or $1.75 per candle. Now we did this because these costs will increase by $1.75 for each of the candles produced. So when we do our analysis, we have two options here. We can accept the special order for $2.95 a candle, or we can reject it. We'll compare the extra revenues we'll get to the extra costs we will incur. The extra revenues, if we accept the order, 800 candles at $2.95 a candle, or $2,360. And of course, if we reject the offer, then our extra revenues are zero. Incremental costs. Well, we will incur the variable production cost of $1.75 per candle. So those costs, if we accept the order, will be $1.75 times 800, or $1,400. We will not incur these costs if we reject the order. Notice that fixed overhead is not going to change in total, so it is not relevant to the decision. I went ahead and put it in our analysis for emphasis, but it obviously does not need to be in there at all. We will have to purchase a candle mold for $800 if we accept the order. We won't buy that mold if we reject it. So overall, our incremental income will be $160 if we accept it, and if we reject it, it will be zero. So based on this analysis, we would accept the order if this is our only option. Now you think about, why would a company go to all this trouble just to earn $160? And there's a couple of reasons. First, They don't have anything better to do with their excess capacity. It's earned $0 or $160. That could be the case. The other case is they may want to get their candles out on these tables for these major donors. It's sort of advertising for them. And they may just want to be philanthropic and help out with this Williamsburg Foundation. So there's multiple reasons they might do this. But just based on the numbers, they would accept. So in your special order problems, the easiest approach is going to be to ask yourself, what are the extra revenues, and compare that to the extra costs. If it will increase profit, based on just the accounting, you would accept it. Okay, work some problems and of course bring questions to class.